What is going on, everyone? Welcome back to another video. We're going to be breaking down our chart today from our largest time frame, starting with the monthly, as we are in the new month of May. Going to look at that, look at our weekly, look at our daily chart, kind of look at what happened today. Discuss my trading a little bit, as I've not been doing too hot. That's just kind of the conditions we're in right now. The market's not an easy read. This is not an easy market to read, and if you're involved and making money, then terrific. Um, but we're trying to keep the losses small and mitigate as much as possible, mitigate the damage. And I'm sure anybody that was long today got kind of hurt. But let's go ahead and look at the bigger picture. Let's break down our monthly chart real quick. We'll look at that. Look at our monthly, look at our weekly, daily, and then kind of look at what we've got going moving forward. All right, so our monthly has been one time framing down, still one time framing down. Monthly's been one time framing down for the last 2 months. All right. The only way we stop the one time framing down is if we take out last month's high. Last month's high is right at 73.25. So 57.73.25 is the high that we need to take out this month in order for us to take out or for us to come back into some type of balance. All right, if we do that, then the bulls accomplish one little thing at a time. And, the chances of us setting new all time highs this year become greater. However, if the bears decide to defend this high here, because, we got up to a high so far this month of 57.24. If somebody's looking to get short right now, they've got a 50-point stop in. If they're big players, right, they don't mind taking a 50-point loss. Looking for it to rotate back down to the lows of this range, which was 48.32. That's a pretty significant swing. If your risk is 50 points, all right, if you're a bear looking to get short because the monthly is still one time framing down and you're looking to come back down towards the lows here, you're risking 50 points to make somewhere around 900, right? So very good risk reward in the big picture if you're looking to get short. However, bulls have taken baby steps to get to this point where it is possible that we may put the monthly back into a balance. But for now, we are still one time framing down. Now, keep in mind that 73.25 is the level that we need to take out. Let's look at our weekly. That just so happens to be our weekly balance high. Now, you can say the weekly is one time framing up if you'd like, but I'm using this high here, last month's high, in order for us to come out of balance on our weekly chart. We need to take out that monthly high and put the monthly back into some type of balance. So that's what needs to happen. Right now, once again, another excellent opportunity if you are a bear to get short against a balance high and a monthly high, right? You risk, like I said, 50 points to the upside. If you're looking to rotate back down here, it's 90 points. Really good. I might even look into taking this trade myself, but with options and maybe date it out a couple weeks from now. But right now, the Bears are defending. And how do we know they're defending? Well, today, they put the daily back into balance. The daily had been one time framing up for a couple days now. All right. Our daily had been one time framing up. It was one time framing up when we broke out of this balance. 1, 2, 3, 4, 5 days, came back into a balance. And then we are one time framing up again, 1, 2, and then come back into a balance. However, this is not showing that balance very well because we did take out this daily low. And how I know that is if you look at our 30-minute chart here, because this is full-time session, so it's showing even the overnight sessions. But if you look at today's price action and Friday's price action, you can see we clearly took out last Friday's low, which put us back into a 3-day balance. Okay, so that's why it kind of looks funky on this chart. I think I can change that. Let me look. See if I change that. Futures. It's just going to be that way no matter what. Maybe was I not in the right thing? What was I on? Anyway, I was looking at something weird there. But I think I was still on the weekly chart. But the daily is firmly back into a balance now. We're going to call it a 3-day balance, right? So I think we're going to have some type of consolidation between the 200 and the 50-day moving average. So if we come back towards the lower end of this balance, which would be around the 5,600 level, we would be testing our 50-day moving average at some point in time, right? Like I said, big area up here, good for shorts to kind of, if they want to get in, this is the area to get in at, to rotate back towards 5,600, see how we react to that. If we can break back below 5,600 in the 50-day moving average, then you start looking towards the other end of this range from a weekly standpoint, because you are still in a weekly balance. You can see here, if we pull up the weekly balance range, pull up our weekly balance range while looking at the daily, you can see how we're getting near that. Now, the rules of balance is you get near balance high, test it, roll over. You get near balance high, push through it a little bit, stretching it, and then roll over. Or you push through it through it, and away from it. So what buyers want to do is push through this level, put the weekly up, get the daily back up, and then put the monthly back into balance. What the bears want to do is keep the weekly in balance, testing the balance high and that monthly high, keeping the monthly down, and then eventually get the daily down, and then go back and test the weekly balance lows, which would ultimately keep the monthly down, if that makes any sense. So big picture, that's what the bears want to do. Big picture, bulls want to hold 5,600 and rotate up higher. So if you're a bear, maybe you're looking for puts, targeting maybe the 560 levels in SPY, like a couple weeks out from now. And you know, that's what you're looking for. If you're a bull, then maybe wait until you back test that 5,600 level, look to get long around that level, and then rotate up higher. But so that is what you want to see in the bigger picture. So just for clarification, daily is back to balance. You can see, I'll pull that up right here on our 30-minute chart. Daily is back to balance. The weekly still in balance, and the monthly one time framing down. We have to get over that 57.73 level in the big picture to make any headway towards the all-time highs. All right. So as far as my trading goes, like I said, we have not been doing so hot in these conditions. And you can see today, it was not a very easy read. After taking out Friday's low, you would have thought maybe, and the overnight low, you would have thought maybe you would have got more of a pullback, but you did not. You actually attempted to go trend up, pretty much moved up higher all day until the last hour of the day. And then just, absolutely got melted on the way back in, which is, crazy. And I guess it was a good risk reward short if you didn't mind taking 15 points of heat, right? Around the 5,700 level. Maybe you're looking, you put your stop above, because having outside days up are pretty rare. So maybe you look to get short at around that 5,700 level, put your stop above 5,724. And then, if looking for this thing to rotate back in which it eventually did, anybody and everybody that was long up here looking for new highs eventually got hurt, stopped out, and then shorts kind of piled in, exaggerating the move to the downside. But strong day for the bulls, but bears did put the daily back to balance, and you can see this was a very tough read. I got chopped up. I took a long, and I think D period it began to pull back a lot more than I like. So I got stopped out. Tried it again in E period, got stopped out, and then seeing that we couldn't hold trend in F period, tried to get short, fading the extreme. Guess what? Stopped out because they just kept pushing this thing higher. Because you would think not being able to hold trend the first time They wouldn't do it again, but in F period they attempted. And then whenever they opened up in G period and pulled back and filled that set of single prints, I felt like a complete idiot. But you never know how much they're going to stretch a market. So clearly, very difficult conditions to read. Allow hindsight 2020. Looking back, any pullback should have been bought, and then not staying married to the position, getting out very quickly. That's what you should have looked to do moving forward. However, and then even fading the extremes, if you stuck with it and widened your stop a little bit, playing with small size, would have paid at some point as well. It paid here on a pullback, it paid here on a pullback, and then it did pay here on the pullback. So the only time getting long was wrong was in the last hour, clearly. But I'm sure even then there was a little bit of a retracement to the upside, giving a little bit of relief, as there might have been some profit taking on the short side. But nonetheless, very choppy conditions, hard to read. And because of that, I think what I'm going to do moving forward, and it's going to take me a while to kind of gain back the losses I've sustained over the last couple of weeks, is I'm just going to have to reduce size and I'm really going to be trading strictly on a 30 to 15 minute time frame and doing maybe 1 to 2 lots. I think that's what's going to have to be. Maybe 1 to 2 lots. And then if the setup is right, then maybe 3 to 5 on the more ripe trades. Maybe we hold trend on the upside day, and things are looking good. But for the most part, need to reduce size because we've been trading around 10 lots, and it's been hurting a lot whenever you take these losses back to back. So that's a game plan moving forward. And then real quick, I do kind of want to check, just for shits and giggles, if we were to target, let's see, 2 weeks, let's say the end of this month, May 30th, target. These things are expensive. I'm sure the premium jumped up, but if you're targeting the 550s, put on the downside, you're looking at a $7 premium is what you're paying, but could pay very well. Kind of a tough thing. Maybe we cut that in half. Let's see. Yeah, $3 for May 15th, 550 puts. And then you put your stop, above that 773 level, that weekly high and monthly high. So maybe that's what you look to do. If you get any retest of that 7,700 level, maybe look to get short in that 7,700 level to rotate over back towards the 560s and then back towards it. Ultimately, what the bears want to see is all the way back down towards the 5,400 level, which would pay pretty good if it were to happen in the next couple of weeks. Now, on the upside, if we do, and you're looking for the 578s, yeah, those are pretty pricey too. But yeah, with that being said, we're just going to go ahead and wrap this video up. Catch you guys in the next one.